Good afternoon, everyone, and happy Friday. Welcome to Stock Market Today. You have Alyssa Corum and Ed Carson here to break down the action for today and how this week turned out. We're also going to take a look at some interesting movers underneath the surface. And today, Ed, growth stocks were looking pretty interesting. After a midweek test, we ended the week on a pretty good note.
Yeah, it was pretty amazing how we rebounded. We're going to take a look at Google, DocuSign, and Dell Computer, which all text, and they all seem a little different, but they all do share some similar traits.
Okay, we will analyze those charts, but first, let's take a look at the major indexes. So, Ed, you have the S&P 500 here on Thinkorswim from TD Ameritrade with the candlesticks and our regression channel lines. So, we had a test on Thursday with the S&P coming down to the 21-day line, some nice support off of that level and gaining about 0.9% for the day today. The NASDAQ led the gains on Friday, up 1.5% by the close, and the Dow up about 0.5%. Really good to see where the S&P finished.
Yeah, it was really positive action for the whole market. With the S&P sort of starting that rebound on Thursday, it almost had a closing high, all-time closing high. We've definitely been looking for that. A lot of positives. It's actually been trading very tightly over the last several weeks, getting right to the top of all of this kind of action. It's poised for a breakout to an all-time high, but it's was really nice to see. It's nice to go from like almost, like having one test and now the other test, but this is a much nicer test to be facing instead of like, boy, if we fail this, we're dropping out kind of thing. But this is much more encouraging.
Yeah, support where we wanted to see it, and now if we can just see the S&P really get to new highs, that would be also encouraging. And now on a weekly basis, so second strong week here, and we're getting back towards that middle regression channel line.
Yeah, and just to point out, it's actually from this point, from this big rally up here, we've had this is now an 8 weeks tight, which we talk about. It's just sort of like ironic, but it's been very tight action on a weekly basis. There have been some swings, and you can see some of these weeks have had some big moves, but ultimately the S&P has traded relatively tightly week to week. So, that's something to be looking at. That's definitely the case with the NASDAQ. Is that sometimes it's nice to step back and just take a look at the weekly action, and that would have probably kept you a little bit more confident going forward.
And so potentially with that, maybe still a lot of setups out there in the process of forming and coiling up to potentially spring higher.
Yeah, I mean, stocks will tend to look like the major indexes, or and you're seeing this kind of set up. There's probably a lot of shakeouts, so a lot of positive action out there that we're seeing.
Most definitely. So let's flip on over to MarketSmith, where we can check in on the NASDAQ. Like we mentioned earlier, the NASDAQ gaining 1.5% on Friday, and a little bit of a scarier test on Thursday for the NASDAQ, Ed, but ultimately finding support right around not only the 50-day line, but a lot of those moving averages converging actually at that level, and a big boost today.
Yeah, yesterday did not look good. It closed low in the range and really low in the true range because it sort of gapped down on Thursday to rebound now, getting up to sort of the short-term highs right there. Yes, again, just a big shift in that regard. And just to show, this is something Joe Fahmy was pointing out on IBD Live, our special guest. Tight action here on the weekly closes. And, again, 3 straight weekly gains. These last couple of weeks closing high in the range, actually 3 straight weeks high in the range. Despite all the ups and downs that we've seen, it's on a weekly basis, some encouraging trends suggesting that despite Thursday's scare, sort of a jump scare, it was the positive trend remains.
Yes, heading in the right direction, although we're not seeing a lot of volume behind this move to the upside.
That is the real problem today. And I think especially when you consider Thursday was a distribution day on the NASDAQ, above average volume, in fact, the highest volume in a while, and then to have the below average volume. So that's one thing to temper excitement. And also there are these little short-term highs or the all-time highs in the S&P. It'd be nice to see that move higher with some volume. So yeah, I think that's a really good point to make.
And before we move on to taking a look at a couple of stocks, we also want to take a look at how small caps finished the week, recently retaking the 50-day line, coming down to test the 21-day as well. And now it is hanging out in kind of a tight area.
Yeah, and again, this is almost the best of all the, in terms of like for setups for leading stocks, sort of a consolidation over a couple of weeks. It's nice to see this sort of testing like the 21-day, didn't get to the 50-day. Again, are we getting that rally to really move on? It seems like we're right at that edge now. We're right at the edge of like really moving forward. Doesn't mean that that has to last, but it's definitely a positive thing for as we head into the new week going on Monday.
That's right. And we'll put all that together at the end, give you a little bit more of our thoughts for the plan of action for the week ahead. But let's take a look at Google, underscoring the strength that we saw in a lot of tech and growth names today. So Google gaining 2%, and it closed just below that 2,400 level after a couple of sessions of some tight trade. So buying opportunity here, Ed.
Yeah, it now has a new flat base, and it's, I guess it probably is a base on base that just formed. But yeah, today it cleared, at least intraday, this little short-term high, this sort of consolidation area. It technically closed like a few cents below it, but I think this is actionable today. The volume is picked up versus the last couple of days, which it was below average volume. Don't get me wrong. This was like to see a lot more volume, but at least it didn't come after, down day. It was, so that is one negative, but a couple of positives. The relative strength line is basically at all-time highs. So many other techs have had these losses and are still well down below. And the other one is accelerating growth. This has 3/4 of accelerating earnings and revenue growth. And that's just a really positive sign. It's just, it's supposed to be a really good year for Google. And, it's just definitely something that investors should be looking at on the technicals and the fundamentals.
Yeah, a standout in the tech sector, no doubt. And it was our stock of the day today. So you can check out that story as well. Our daily stock of the day, it's usually focusing on a stock that is actionable or maybe near a buy point. But in poor market conditions, we're maybe focusing on some other things, but it's usually something that's actionable. So it's always a great article to check out every day for new ideas of actionable stocks. But DocuSign is a stock that we talked about a lot, Ed, last year. Really fell off of our radar, and you can see why with all the choppy action. Maybe even the weekly chart would show even more why it had really fallen off of our radar after its big move. But this week, gaining almost 16%, some heavy volume behind that move on some news related to that. So getting back above its 200-day line. But should we get excited here, Ed? Is it too early?
It's you can buy it now, and I'm going to switch back to a daily just for a couple of reasons. One, the relative strength line looks terrible still. I mean, it's like RS line. It had a nice bounce today, but it still looks terrible. Just get that out of the way. But it did retake the 50-day and 200-day line, so you could see that as an aggressive, trend line break here. From here on this situation, you could buy it off of that. It was added to leaderboard. Actually, if you think about this area of the chart, not looking all the way back to September, but then you can see this is a double bottom base, and this is actually a legitimate buy point at 236.21. So if it broke out here, or if it, paused here, or it broke, came above and then set up a handle, these are places legitimate buying points for this stock. Again, the RS, the base is 36% deep, which is deep, but it's not nearly as deep as a lot of these base stocks. We've seen stocks down 70, 80%, and they're trying to bounce back, but they have so much further to go. And like Google, accelerating earnings and sales growth. This one has really tremendous growth on the top line, and bottom line, 267%, and 58% revenue growth. So this is a former leader trying to bounce back.
So do you think that this maybe could be a canary in the coal mine or a signal for improving prospects for those kind of growth names that we saw really flourish in 2020? Because it looks like in the March reporting quarter, similar strong growth, but the street wasn't really rewarding those kind of numbers last quarter like they clearly are with this quarter for DocuSign. What do you think has shifted there?
I mean, it just seems like more and more time. I don't know because it seems like a lot of those stocks, some of those that are down 7 to 8% are trying to bounce back. This one is just, that just sometimes happens. You can't, the market will tell you what it should be. Sometimes you say, well, the fundamentals look great, but the market, you don't want to fight the market. And, this was not, if you tried to buy it off of this, you were just going to suffer some more losses. This could still be early. I mean, I'm not, if the market turns south, there's a very good sign DocuSign will sell off. It could be that this stock pauses here because it does have some overhead resistance going back from late 2020. But this could be a positive sign. There's a lot of strength. Maybe this stock has a lot to go. It does have tremendous growth, probably better than a lot of the other former leaders. So definitely one to be watching for sure.
We will be watching it closely. And we want to take a look at Dell setting up a nice day today, up 1.9%. And if you take a look at it on the weekly chart too, you can see the relative strength line hitting a new high, that RS line blue dot. So even though it isn't technically above that flat base buy point in a big way just yet, seeing that relative strength line at a new high before the stock is definitely a bullish signal.
Very bullish signal. And you can see like it rebounded off the 10-week line. Found support there, after a long run here. I mean, really powerful run over the past year. It seems like there was a run because people were buying PCs at home and now they have to buy PCs at work. So that might be almost now the hybrid work system might almost be twice as many PC sales long term. But nice action here. You probably could have bought it, on Tuesday as it sort of rebounded, broke a trend line, sort of was coming off the 10-week line, coming off the 21-day line. But it's, right now at this point, you're so close to the actual buy point, I would probably just wait for the breakout. But again, once again, accelerating earnings growth. Now, 12% revenue growth does not quite compare to DocuSign's growth. I don't want to make that clear, but still the trend is your friend in that regard. Again, I don't know if that can continue because obviously the earnings estimates are a lot lower here. So maybe growth is going to slow quite a bit coming forward. But again, it's just nice to see, if you could have the fundamentals, that kind of strong growth, accelerating growth, the technicals lining up, that's always a good game plan for buying stocks.
And interesting to see more of these tech and growth stocks in the spotlight, Ed, when it's been a very choppy split market, but it seems like we are seeing some improvement. And this action for Google and DocuSign comes on a week where we saw a lot of strength elsewhere as well. In the oil and gas sector, a lot of cup with handle breakouts from those names.
There was a lot of strength there. Obviously, oil prices were driving. A lot of them sort of broke out and just zoomed right past buy points. And it was sort of like if you weren't, that was the reason you have to really pay attention and be jumping on them. Otherwise, I probably would have highlighted one of them here, but it's almost like, hey, Tuesday morning or Wednesday morning, you've got about an hour. And if you don't grab them, you've missed it. But yeah, there was a lot of strength there. David Chung on IBD Live, he was pointing out that the NASDAQ, though, has outpaced the S&P and Dow since some of those May lows. And that's one reason why you're seeing some more tech names come to the fore. And so we'll have to see. We'll have to see if that can continue. But yeah, a lot of positive action across the market, not just in this tech sector.
So with that positive action, how should investors now be positioning their portfolios for the week ahead? Because we are seeing these improving signals, which seems like it would lead investors to wanting to maybe get more invested. If they're not 100% invested at this point, maybe look at other areas that haven't been those industrial turnaround plays that we've been focusing on so much. Maybe the strength is broadening.
The strength is broadening. It's also narrowing. There's some of the retailers and home builders did not have a good week. I mean, so there's always this revolving situation. So I would, on the one hand, you probably should, like the improving the general market would suggest you'd want to be adding exposure, and techs would be in part of that because they are clearly doing better. But you don't want to get too excited. I mean, I think growth investors and we tend to be, like CanSlim is often synonymous with growth investors because we want to look at growth stocks. And so seeing them get back, it's like, wow, I want to buy them all. But we still don't know, while the market was really encouraging, we don't know if the market's just going to show choppy action again. Maybe you want to, if it continues to go choppy but go up, that's a little different. But it could roll over. And also, we don't know if techs are going to continue. They could slump while miners take off again, or maybe home builders bounce back again, or who knows what'll happen. So don't just say I'm going to go from not in 20% invested to fully on margin and it's all in growth stocks. That may work today, but I still think you still need to be diversified in your leadership and not, it's not 2020 again.
Yeah, and with that being said, remaining disciplined with your entries, making sure that you're not chasing the shiny objects and buying the oil stocks as they get extended, or Nvidia getting extended now by the end of the week, because that could leave you vulnerable to a potential pullback.
Yeah, I mean, this is definitely market. If you're playing by the rules, you can probably make some money, but you definitely want to play by the rules, and it's just not worth the risk to get that extra few bucks that you might get. The downside is way too high.
That's right. Well, for more commentary from Ed, make sure you check out his column over the weekend. Ed, we look forward to that commentary, and thank you all for watching. We'll be back with more on Monday morning on IBD Live, so we hope you tune in. Investors.com/IBD Live. Hope you have a great weekend. We'll see you back here next week.